K.R.Choksey joins us live, Managing Director of KR.Choksey Securities. Devin, good morning. Thank you for joining us. Devin, Nifty is up more than 350 points from the recent low. Do you think the storm has come and gone, or in the short term this is as good as it gets, and at max Nifty could appreciate another 100 points and after that we could hit a wall?
Good morning, Nikunj. Well, I think the kind of a rally that we are witnessing in Nifty, I think largely attributed to few things. First and foremost, the rupee has stopped appreciating further, and it has in fact I think remained little above than what it was at one point of time at 66 levels. So to an extent, I think those portfolios which were triggering sell, I think they stopped selling it. As a result of which, I think some amount of short coverings have been seen in last 2-3 trading sessions. As far as the FI traders or the ETF funds are concerned, I think they have actually added some portfolio positions. And largely driven by the heavyweights like Reliance and TCS, the rally has I think spurred to 350 kind of a plus points. Now, so because of I think this, sorry, I think I'm getting an audio disturbance. Because of this particular, I think the momentum of these two heavyweight stocks, I think the Nifty has moved up. Now whether it will sustain, I think it's a big question mark. Unless and until the fresh buying comes into the market, I think it's going to be always challenging. To my mind, I think the fresh buying at this point of time is not seen happening immediately. Though short covering led buying would certainly continue in this kind of a situation. I would think that I think the momentum is continuing. Probably we might see 5660, 5670 kind of a level on the up move, with a 5500 becoming I think a trailing stop loss level for most of the funds, the trading funds. If that breaks, then probably I think we might see the fall eventually. But in the current month, you have some of the positive things which are likely to come up, and one of them would be new RBI governor resuming the office. If he indicates growth related policy measures, then to my mind the banking stocks which have been I think battered down substantially, I think they could participate into the market. So yes, I think there are possibilities for the upside of the Nifty in current month, and we would probably keenly trade in this kind of environment. Wouldn't go short in the market, but certainly I think wait for the opportunity to buy at the right time.
With a print of 2000 in the rear view mirror for TCS, the important question is where could TCS go from here?
Yeah, Nikunj, I think it's a good question. I think one would not probably like to speculate about the price, given the valuation at which the company is quoting, and obviously given the premium that it is commanding over the entire market. Obviously, it reminds me of the similar situation which at one point of time FMCG companies were commanding in the marketplace. I think it's more of a risk aversion which is probably driving people more into some of the safe havens like IT and particularly TCS, given the kind of a growth potential that the company has always demonstrated. Fundamentally, no weakness sign, of course. I think the company remains on a solid front. But the fact is that I think at premium valuation, will one want to like to buy and ride on it? I'm not too sure. It could give 10-15% appreciation from current level, that is not touted. But at the same time, I think the overall market where the growth trajectory is available at such a discounted valuation, probably one would like to keep focus on them as well and probably ride the up move. And I'm referring to some of the banking counters which are quoting at below book value levels, and that could possibly surprise the market on an upside. So would like to keep money reserved for that kind of a possibility on an up move. And I strongly believe that I think interest rate reduction would be the alternative for revival of the growth, and that's where I think one would like to probably buy some of the banks. Within PSU space also, I think SBI kind of bank would remain very interesting. Though in private sector space, Axis Bank, ICICI Bank, Yes Bank kind of names would definitely I think go well. So I think one would like to focus over there to get 15-20% appreciation in a short to medium term as well.
David, what explains the move in the sugar pack yesterday? Was it just a trading bounce up, or do you think there's something fundamental to it?
Well, I think what we learned from the ministry talk here is that they want to basically insist on 5% blending of ethanol. That same old story which keeps popping up again and again, I think they are now insisting on it. And at the same time, I think this time around the situation might be more favorable to this particular move because of 35 rupees per litre kind of a realization that you might end up getting from the ethanol blending. Given the kind of a situation in which I think the ministry wants to bring this particular thing up, one will have to really see whether I think we really have the infrastructure for the blending purpose. Otherwise, I think it would be only a move without any result. But yes, I think the market gave respect to this particular requirement, and maybe I think that's the reason for which many of the sugar stocks yesterday moved up. I would think that I think if it becomes reality, then it would be I think a balancing act, because many of the sugar companies have created a large size ethanol capacity already, and they may probably get benefited if the realization stays at 35 rupees per liter kind of a amount.
Devin, looks like the JP and Ultratech deal is a done deal. So if the deal is announced later this week, how do you see the stock reacting?
Well, I think certainly for JP Group, I think it's making more sense. I think because of the debt reduction formula that they are employing by shedding out their assets and probably realizing money to reduce the debt. So for them it is good, but we don't track that company as much. We like Ultratech more from the point of view that they're consolidating big time into this entire business, and which is giving them a good amount of power, pricing power, as well as I think the cost power to reduce the cost of production given the kind of a wide portfolio that they're creating. And the Gujarat plant which they want to acquire from JP, I think that could be I think a good amount of growth provider for them, because the entire Mumbai-Delhi corridor expansion is happening with around 34% going towards Gujarat state and around 33% in Rajasthan state. So obviously two nearby states I think would consume majority of the cement. So they are probably I think much better place. So I would remain strong on Ultratech vis-a-vis JP, and I think would like to keep that stock in the portfolio or add further into the portfolio given the market opportunity at current levels.
Devin, the difference between the large cap index and the mid cap index is nearing an all-time high. In the recent leg of market mayhem, large cap stocks have fallen much more than the mid cap stocks. So do you think mid cap stocks have now reached the deep end of the pool and they are unlikely to correct further?
I think it's a good point, Nikunj. Again, I think this analysis says that many of the mid cap companies are today quoting at a level at which I think the stocks would be quoting at around 3, 4, 5 P's. And not necessarily that they are bad companies, not necessarily that they are having a large amount of debt or forex exposure either. So to an extent, I think the kind of the kind of punishment which the mid caps have got, I think it suggests that yes, I think they have probably reached to the bottom levels. Maybe I think it's a matter of time when the appetite for buying comes into the market. Currently the buying appetite is missing, and the large cap stocks currently are more in favor. At the same time, I think they are in a trading portfolio of most of the funds. So as a result of which most of the funds would like to trade in and trade out and make some cool absolute gain out of this activity. That's where I think you are seeing the wild fluctuation into many of the large cap companies, including the fall which we saw in the last week. I would say that a selective mid cap stocks should be bought from the market into the portfolio and stay invested, because now probably I think these stocks are available below book value. They are having good dividend yields, and many of the companies that I have said I think are available at a price earning ratio of comfortable between 3 to 5. So probably it can't go worse than this if the business model is right. Would like to add many of the mid cap stocks in this kind of an opportunity that market is providing currently.
Devin, it's been a mixed bag in terms of the monthly auto sales data. What has been your observation?
Well, I think nothing new, but what we have come across is case of Bajaj Auto, particularly on a month-over-month basis. It has surprised many as far as their volume numbers concerned. Maybe largely driven by I think the earlier month's strike, which was probably impacting the company to an extent I think in the volume, which probably I think could be seen overcoming in this last month of August. And that inspires some amount of confidence at the same time, because in the domestic market ahead of festive season, if the company has started seeing numbers picking up for them, quite good chances are there that in the festive season, which is in this month, starting this month, we might be seeing a good amount of buying taking place as far as I think the two-wheelers are concerned. And Bajaj Auto remains the favorite of the lot for two reasons. One, of course, I think this kind of a possibility in the domestic market, but more importantly because of the exports market. The kind of realization that they would get probably because of the fall in the rupee is going to be highest ever as I see it in this particular month, and that's where in this quarter. So that's where I find that the Bajaj Auto is better placed, and the market I think justifiably has responded to the stock price hike I think in last 1 week or so. I think Bajaj Auto is better placed. Tata Motors within the four-wheeler space looks I think even better. Valuation wise the stock is remaining quite interesting, though domestic numbers are weak, but largely driven by the JLR story, and which remains stronger. So to my mind I think the Tata Motors and Bajaj Auto individually from either space I think would be the choice in the portfolio to add.
What is your take on metals? Are you a big fan of this import substitution trade?
Not honestly, I think nothing which basically I think helps the company or the companies, I think beyond a point. I think even in this kind of a situation, because the cost is also rising, the energy cost is not coming down either. So from that perspective, I think it's not, very easy trade. Yes, I think to an extent, I think it protects you from the imported material, but provided there is a growth in the economy, I think right now the issue and situation is the growth in the economy is not happening. And for any metal company to probably register higher amount of growth and the realization growth as well, I think you certainly require the growth to support them. I would think that the valuation wise, many of these companies are staying at a discounted levels, but on the other side, I think there are many headwinds for these companies. Many of the companies are on expansion mode, and there I think they are being troubled. New land acquisition bill is not going to even help them either. So all of these issues are certainly, I think, going to affect some of the companies, though once again I mentioned that I think they are valuation wise not as expensive, so that can be the only comfort level provider to someone who wants to take a contrabet into this particular space. But yes, for growth, I think one will have to wait into many of the metal companies, I suppose.
Devan, so give us some stock ideas that you're currently recommending to your clients, either on the buy or the sell side.
Well, as I said, I think nothing much to talk about on the sell side at lower levels, but frankly, I think we like some of the NBFC stroke banking ideas. We probably find a good merits in the likes of LIC Housing Finance, which is available at a book value, and probably I think this stock remains in a favorable list more because the growth trajectory for this particular segment of business is not coming down. It is largely, I think, remaining intact as we see it. The second stock within the same kind of NBFC infrastructure space which we like is IDFC, once again available below book value, and the kind of a growth story could really resume faster if the rate of interest are brought down. We certainly believe that many of the companies, infrastructure companies today are troubled because of the high cost of debt, and if the cost of debt comes down, the interest rate comes down, then in such situation I think the infrastructure-led growth would once again pick up, and that's where the re-rating of stocks like IDFC could take place. Likewise, some of the banking stocks which I earlier mentioned, I think they are also remaining in favorable list, but I think few of these ideas really remaining good to add into the portfolios.
Right, Devan, really appreciate your time and thank you for joining us.